You are not going to believe what Bloomberg is saying about the Canadian economy. And on the surface, it sounds like good news, but when you dig just a little bit deeper, the picture looks very different. Bloomberg is reporting that Canada's economy is headed for a weak recovery in the second half of 2025. After shrinking by 1.6% in the second quarter, GDP is expected to grow at just 0.5% annualized in the third quarter. Now, that's technically better than last month's forecast of 0.01%, but let's be honest, that is hardly the kind of growth that tells you we're building real momentum here. Exports are at the heart of this story. They absolutely collapsed last quarter, down 27% annualized as US tariffs kicked in. The forecast now shows a 3.3% rebound, which sounds decent until you realize it's a tiny bounce compared to what we lost. These tariffs, we are now talking 35% on Canadian goods that don't comply with the US-Mexico-Canada agreement. They are hammering some of our most critical industries: steel, aluminum, autos, and copper. And here is the thing, that pain isn't spread evenly across the country. Provinces that rely heavily on manufacturing like Ontario and Quebec are really bearing the brunt of this. Auto manufacturers especially are under serious pressure. Meanwhile, resource-driven provinces like Saskatchewan, Alberta, and Newfoundland are less exposed. In some cases, they're actually benefiting from strong global demand for their resources. Beyond trade, the survey of economists is also pointing to a weak labor market. Unemployment is projected to hit 7.3% by the end of the year, a level we have not seen in quite a while. The one bright spot, inflation is expected to stay near the Bank of Canada's 2% target. So at least we have price stability, even if growth is sluggish. And then there's business investment, which remains weak. Companies are holding back. They're waiting for more clarity before they commit to major spending. The result is an economy that's technically moving forward on paper, but still struggling to build any real confidence. One economist called it bruised, and honestly, that captures it pretty good. We're not in recession, but we are nowhere near healthy growth either. Now let me tell you how I see this. First, it's hard to feel optimistic when every piece of positive news comes with a negative attached to it. A 0.5% rebound is technically good, but when you're bouncing back from a 1.6% contraction, it doesn't really feel like growth. It feels like we're just trying to keep our heads above water. And unless the US backs off on tariffs, this pain is likely to continue or even get worse. Second, I think we need to talk about how uneven this is going across the country. Manufacturing provinces, especially Ontario, with its auto sector, are feeling the sharpest pain right now. Meanwhile, resource-heavy provinces are relatively sheltered. What that creates is a split economy. Some parts of Canada are hurting badly, while others are holding steady. And that is something that we really need to acknowledge when we talk about the Canadian economy like it's all one story. It is not. Third, the jobs picture really concerns me. High unemployment means more Canadians are struggling to just get by, and it puts more pressure on government services that are already stretched thin. And when it comes to housing, income is the number one thing that you need to qualify for a mortgage or keep your home. If jobs are disappearing, that is bad news for the housing market. Now, there is one small silver lining. Lower demand might ease housing prices a bit, which could create openings for first-time buyers who are financially stable, but that is a very small bright spot in an otherwise very worrying picture. Finally, let's zoom out and look at the big picture here. Canada is heavily dependent on the United States, and until that changes, we are always going to be vulnerable to this. Tariff shocks like this one. We simply do not have the infrastructure in place to diversify our exports. That has to change. And Canadians, along with our governments, need to be realistic about this. It is going to take years to build out the pipelines, trade routes, and agreements we need to reach new markets. But the sooner we start, the sooner that we can reduce our vulnerability. So here's my advice to Canadians. On a personal level, don't get lost in the headlines. Focus on what you can actually control, saving money, paying down debt, preparing yourself for opportunities when they come. There is always something that you can do to move forward, even in a bruised economy. On a political level, push leaders who are serious about diversifying our trade. We need to develop our resources and find markets beyond the US. If we don't do this, every trade fight is going to leave us bruised again and again. So yes, Canada may avoid a technical recession, but avoiding a recession is not the same thing as thriving. The real story here is that Canada is bruised. And the big question now is whether we use this moment to build real resilience or whether we stay vulnerable to the next wave of tariffs and global shocks. I hope you enjoyed this episode. Please consider hitting the like and subscribe button. If you loved watching this video, you're going to love this one as well.